Sachin Shah, who's the Executive Director and Fund Manager at Emkay Investment Managers, joins us now. Sachin, always a pleasure to welcome you on NDTV Profit. My first question to you, as we wind down on 2025 and look forward to 2026, what are the most important factors on your radar and your overall outlook for the market performance for the next year?
Yeah, hi. Thank you so much for having me on your show. I think clearly the set is staged for a very, very good calendar year 2026. And why I say that is because if you see from a lot of macro perspectives and a lot of things that have happened in the last at least 2 to 3 quarters, I think they are going to really play out very well. I think from the macro perspective, if you think about it today, the way the oil prices are just about 60 odd dollars, I think it's extremely positive for a country like India. Uh, Overall inflation in most of the other commodities also is fairly reasonable, which is also going to help us in terms of managing our manufacturing inflation also overall. So I think that's one very important thing. The other thing, of course, all the measures that the government has taken, and of course the monetary policy. I think whether it's the tax cuts in terms of the GST or in terms of the interest rate cuts and liquidity, all of that will definitely play out very well. Over and above this, I think the rain gods have also been very kind to us this year. So I think with good monsoons, I think we are going to see great rural demand coming back, and we are already seeing decent amount of green shoots coming from that side. Uh, so I think, and of course, we are already seeing some results of this, because if you see the way the auto demand has come back in the last since the festival season, and it continues to remain even fairly buoyant at this point in time. I think even if you see the banking sector, I think, and overall financial services, they should also see a very, very decent demand uptick as the overall demand in the country picks up. So they will be again one of the biggest beneficiaries of that. I'm fairly positive on the overall economic growth, corporate earnings growth going into calendar year 26.
Right, so corporate earnings growth also, and of course, the transmission of the rate cut will also have a positive impact on most of the companies as well. But Sachin, when I look at the FII outflows, and that has been a major theme for this particular year, for the next year, what are the key aspects and the signals that we are picking up? Because a large part of the transaction, as well as the market premiumization, also depends on the flush of money coming in from these foreign participants.
Yeah, I think that's a function of see, for FIIs, it's also an arbitrage opportunity at times, because some of the other markets which were not doing so well and they became overly cheap. So sometimes they try to play that arbitrage opportunity for a very short period kind of time. Also, we have to understand that some bit of this FII money reflects a lot of this foreign private equity funds which are actually exiting or selling some of their investments through the IPOs, when some of their companies which they have been nurturing over the last many, many years, when they come to market. So we've seen a lot of that money also actually going out. It's not exactly just the FII money which is getting sold out, but it's also some bit of FDI which is getting capitalized. So I think we have to understand that part. I think what is more important from going here on is that today there are many sectors now in the Indian economy or in the Indian markets where we have decent valuations, where the risk reward is definitely much more favorable. So whether it's your autos, whether it's banking, whether it's IT, to some extent very selectively pharma, and maybe some bit in oil and gas. So these are some large sectors where there is decent amount of weight in even in the indices. I think there now the valuations are getting reasonable over the last 12 months. So I'm fairly optimistic that now we will get selective buying from foreign institutional investors over the next 2 to 3 quarters.
All right, so good FII inflows expected in the next 2 to 3 quarters. But Sachin, you saw that at least FDI did come in when we talk about the financial services space. And that's a huge amount and a key driver that has really been a part of 2025 as well. But when we talk about some of the sectors which are now beaten down, and a good buy at this particular time while Nifty 50 is just about holding on to 26,000 levels. What is a good buy in the market, which is a spot which can be really banked upon for a mid to long term perspective?
Yeah, we strongly believe that among the sectors which are beaten down, clearly IT services, which has been significantly down in the calendar year 25, is probably now at a juncture where the risk adjusted valuations are very, very reasonable. The outlook on growth should get much better from here. We're already seeing some signs in the last quarterly results and some of the guidances that they have been talking about, the companies have been talking about. So we feel that IT clearly is one of those sectors which can actually do much better in calendar year 26 versus calendar year 25. Of course, even overall banking and particularly private sector banking, autos, and selectively pharma, I think these are also some of the sectors where we are fairly overweight, and we continue to believe that they should do well over the next 12 to 18 months.
Right, and defense sector, what's your view? Because now the house is divided, Sachin, for various aspects on defense sector. From being the flavor of this year, now it has taken a huge turn. How is your in-house view on defense?
I think with defense, will always have to be extremely selective because these are businesses where they have a lot of gestation periods in terms of their getting converting their RFQs into order books, and then order books also getting actually converted into actually revenues or delivery of goods. I think these are very, very long gestation businesses. So one will have to be very, very selective. It's not right to paint the entire all the companies in the same sector with one brush. So one will have to be it's a very bottoms up business to my mind, because every business will have their own cycle. That's how one will have to approach it.